Hi, I'm Tom Carr, and this is the Property Web. Now, if you're on a property journey or you want to start one, I think the chances are you've probably found it a little difficult. And, at some point, you really want to know who can actually help me. Now, as a mortgage broker, I would definitely be tempted to say that's me, but I also want to help you go further. This podcast is really here to introduce you to people, the experts, who I think can help. And give you the right guidance and support. So my goal is really to sort of help you make an informed decision about who you can work with and get that property dream on track. So today we've got a perfect example of a guest who brings a different perspective and a unique set of skills. And Sarah Pyke is a successful property investor, and she also runs her own accountancy firm. So really keen to sort of have a chat, Sarah, with you and sort of find out about your journey and how you can help people out there. So
absolutely, thanks for having me, Tom.
Yeah. All right, cool. So I think important just to sort of go back a few steps and just sort of work out who you are as a person and what sort of drives you before we get into nuts and bolts.
Deep stuff.
Yes, exactly. So why don't we set the stage a bit and go back where you're not actually from Sydney, I don't think.
No, I'm originally from Tasmania, so born and raised in Tasmania.
Yep.
And I've been in Sydney about 15 and a half years. So it's a while, but it's still I still love Sydney. I do appreciate sort of the further I get away from actually living in Tassie, I appreciate the raw, uncut beauty of it. And you can sort of go home, be off the grid really for the days that you're there. But my heart is very much in Sydney.
Awesome. And so what did you do for uni? Like what inspired this sort of move towards where you are now? Like, I'm trying to work back a few steps.
Oh, that's steps. I feel like that's 20 years of my life. I guess it's one of those things that was never planned. None of it was ever planned. The only thing I really do vividly remember is I was in college at year 12, and I did a business course in that year, and that then took me into my Bachelor of Commerce, Bachelor of Business, and from there I just got this love of kind of wealth creation and that sort of thing more so. I don't know why I didn't become a financial planner actually, because I really resonated with the fact that you could set yourself up financially to be, for that freedom, that financial freedom that I guess from a familiar perspective, I didn't see that with my family. So I really wanted to be independent, financially stable and financially free really as soon as I possibly could be. Yeah,
okay. And so you did the uni, you started the roles, and what sort of led you into that sort of more corporate world or accountancy in general? How did you get started? Like, what was the first role maybe?
Yeah, well, my first role was actually in Tasmania at KPMG when I was working part-time as well as studying full-time, which was actually a pretty normal thing at that stage. And I'm not sure how normal it is now, but a lot of us were working, basically part-time, which in saying part-time, it was like multiple days a week, but also studying full-time at university. So that was the sort of intro to it, and then it kind of just naturally progresses from there. With every role, every career, most people want to keep progressing. I've always been quite ambitious, so that was the starting point. But it was always like, okay, well, obviously partnership is the end goal, and you just ride that train until you kind of get there. My train stopped a little short, but obviously now I'm my own partner. So
exactly, and I read somewhere, this is an interesting factoid about you, but didn't you sort of get fired on your birthday or something like that?
I did.
Do you want to tell us a bit more about that?
Yeah, so this is actually how my business came about. So it was back in 2022, midway through 2022, and my birthday's the 23rd of June. And I'd actually gone away to Vietnam for a week. It was the best holiday, I had the most amazing time. And I came back and I got walked from my job for taking that holiday. So then the business was born, and honestly, it was one of those things. Again, I never planned to be an entrepreneur. I never planned to be a business owner. It was never something that I had really aspired to be. But now that I'm here, it's exactly where I'm meant to be. And just that sort of event was just the universe's way of getting me here, because I wasn't going to do it on my own.
Yeah, that's amazing. I mean, everyone needs that trigger. Like, I wasn't exactly
yeah,
fired on my
maybe not
birthday,
that
but
trigger, but yeah, I know what you mean.
a trigger.
Yeah.
Awesome. So you started Bond Financial.
Yes.
You've been running that for a few years now.
Mm-hmm.
Why don't you tell us a little bit more about that and who you're helping and what sort of goals are there?
Yeah, so look, there's 1,000,001 accountants. My accounting firm, I always say there's sort of two halves. So there's the compliance side, which is ATO compliance, whether that's your tax return, business activity statements, all the things that you have to do to remain compliant and, in the ATO's good books. On the other side is what we call outsourced or fractional CFO. So that might be either helping businesses to run the financial side of their business, actually being inside the business, doing the doing, whether that's bookkeeping, payroll, receivables, payables, or if you already have that internal support, then we can come in at more of a strategic and managerial level, whether it be budgeting, whether it be monthly accountability and management meetings, reporting, that sort of thing. So it's, look, really the biggest gap I saw in our market and the reason sort of I wanted to start this business was, although yes, we're accountants, we're highly qualified, we've been doing it for a long time, there's a lot of information to know in our industry, it more came down to the service offering. I've worked in chartered firms for sort of 15 years, I've been in the industry for 20, and just the actual service that clients get, then it's at the end of the day, behind every business is a human. And you treat that human like you would like to be treated. You give them good customer service. That's really all most people want.
Yeah, I was going to say, similar to mortgage broking, it's that
a lot of mortgage brokers.
Yeah. It's often what people want is just that guidance, that advice, that sort of person to talk to. It's not like anyone can, lots of people can do the same thing, but it's just that finding that connection and just walking people through.
Correct.
Is just such a big thing.
Exactly. Like a lot of the clients that I do get, and I work in a very emotive kind of industry. Taxes can be very stressful and very embarrassing for some people. There can be shame attached to it if they're behind, a number of years. People really stick their head in the sand when it comes to doing their tax return, which I understand. But so it's really meeting them where they're at and going, well, look, there's nowhere in our education system, unless you've gone to university like I have, nowhere do they teach you in schooling about tax returns, about your tax file number and how sensitive that number is, managing a credit card. I have a lot of clients that don't even really know when you say, well, when does your credit card roll over? When do your 55 days interest-free start?
Yep.
Kind of look at you blankly and go, I don't really know what you're talking about. So that doesn't get taught anywhere. So I very much appreciate that my role is to really meet people where they're at, make them feel comfortable, let them ask all the questions. In my book, there's no such thing as a silly question. And really, really help to make them feel more confident in dealing with what we all have to deal with. Yeah,
brilliant. It's definitely rings home for me with other clients I see as well. So talk to me a little bit more about property, because I know you've sort of got this side part to you as well. You're a successful property investor in your own right, and you started quite young as well. I think it may be just worth touching on that.
Yeah, no, I kind of forget about this part of myself. So when I first moved to Sydney, I was 22, and within that first 12 months, I actually bought the property that was on the opposite side of the hallway that I was staying, because it was actually cheaper at that time to buy than it was to rent.
Wow.
Which sounds a bit silly now, but at the time, that one bedroom apartment in Wollongong cost me $165,000, and it's now my highest yielding property. So, it's sort of also just right place, right time, in that regard. But so it started sort of at 22, 23, and I invested probably for a good 10 years. I haven't bought anything recently in the last kind of 6 to 8 years, but the bank's kind of sort of like, no, I have equity there. I have about $1 million worth of equity, but the bank just, won't let me have it. So,
and as an accountant, I suppose people might be thinking, what would be some of the extra things you would look for in property investing that perhaps other people wouldn't? Like, are there sort of extra tax advantages or anything that sort of on your mind that you've made use of or you would recommend to people?
Yeah, look, I guess obviously as an accountant, I go straight to sort of the numbers side of things. I'm what you would call a rent investor. I don't live in anything that I own because financially it's never really made sense. I can generally pay a cheaper market rent myself than living in any of my properties within the council rates and the strata and everything that goes on top of that. So all of my properties, I have 5 in total, and they've all been rented their whole sort of entirety, other than the first property I bought, and I did live in that for 12 months back when you sort of got the, the first homeowners grants and all the conditions that went with that. But I guess for me, it comes down to the numbers of, well, based on rental yield, based on what I know to be sort of, the interest repayments and the on costs, how far into the black or the red will I be? And this obviously then changes depending on how big your portfolio already is. Look, initially, the first 2 properties, certainly negatively geared, which is why I then went to Queensland, bought a couple of properties that were essentially positive geared, so because that helped to inject cash flow into the portfolio, just to balance it out. But so that has definitely changed for me depending on where I've been in that sort of life cycle. From a tax perspective, look, I've always got great refunds because I've generally always had sort of a deficit. But at the end of the day, that's still my money that I've had to spend to get that tax deduction. So I always say to clients, regardless of personal business, there's no point in spending money just to get a tax deduction. There has to be more to it than that. So with the property, obviously, I'm building wealth. That portfolio now has over doubled in its market value. So whilst I've got some great deductions along the way and I've got tax depreciation schedules and some of those other things, I never do anything just for the point of getting a tax deduction. There's got to be more sort of value to be had.
Yeah, okay. I mean, I think that rent investing strategy is so popular now. I do see a lot of clients coming to me living in Sydney, wanting to live in those nice areas, but also wanting to get on into the property world. And I think it's great that you also started that journey early. You didn't wait, you got straight in and use that sort of corporate money to sort of help pay for it and get started, right?
Yeah, but in saying that, I like when I bought my first property, I was earning like 40 grand a year. Like it was nothing. But banks just gave you money then. Like I know it's changed a lot now. Like I said, I've got $1 million of equity. The bank says no, because I physically don't earn enough to service an additional $1 million if I was to take that loan today. So, whereas they basically just kind of gave you money back in, 2010, 2011. But the landscape has really changed. And I think that's where your involvement is really important because people, even clients that I speak to, because I do have a lot of property investor clients, they don't understand that side of it. They don't understand that you can have a huge deposit, but it actually doesn't have the weight that you think it does. It doesn't have that bargaining power that you hoped it did. And so that's why I think the education piece from your side is actually also really important.
Awesome. Okay. I think maybe we've changed tack slightly and I think often the stories bring things to life, don't they? So, I mean, I was thinking a client example, perhaps to something on the top of your mind, maybe someone who's come to you with a really difficult situation. Maybe you thought they didn't have a way out. Something that you've really felt that you've actually added a lot of value to. Can you think of anything?
Yeah, I think actually one common theme that does come up, and I actually had a new client recently who was telling me the story of their current accountant, is kind of the accountant playing like it's my job to play devil's advocate, but it's not for me to tell you what to do or what not, specifically what not to do. But what I'm finding is a lot of accountants are kind of like, oh no, well, you shouldn't do that. And no, we don't recommend that you do that. This new client I was talking about, they have an investment property. Unfortunately, there was quite a bit of sort of water leakage, and there was a whole issue with that throughout the whole entire building. And they were getting invoices from Strata, which were quite good because part of it was obviously capital, but there was actually a part of it that they had specified was going to be a deduction based on obviously whatever it was for. And so they took these to their account, and like these were sizable. Like this couple spent between $70,000 and $100,000 on rectifying this issue just for their unit. And so they gave these Strata invoices to their accountant, and the accountant's just like, oh no, I just don't like the way it looks. I'm not going to claim it. And basically just kind of said to them, well, no, you're not claiming these. I'm not going to do it for you. Against what was written there, sort of against, so, and I say to a lot of my clients, I am there to give you all the information. I'm there to give you the ATO's perspective, the legislation, how things are meant to happen, and that sort of thing. But at the end of the day, we work on a self-assessment system. So if you want to take a level of risk that still lets you sleep at night, that's kind of up to you. You know, there is obviously lines where I would draw the sand and be like, no, that we're not doing that for you. I'm not going to jump on board with that. I'm not a creative accountant, let's put it that way. But it's very much for you to give you all the information, and then you have the decision as to, okay, well, if you wanted to claim that strata invoice, you know, as they've dissected it, then that's your return. That's your liability. That's your risk. It's just about me giving you the right information and the right tools so that you can make an informed decision.
Okay, interesting. And so I guess people might be thinking, what would the process actually look like if they actually feel like they need the sort of support you're offering? They've either got a small business or they're building wealth and they're sort of investing. What does that process look like? What is the sort of the things they need to do to get started?
Yeah, so look, we don't work with just individuals anymore. So my sort of starting point is individuals with property, so property investors, and then from there it's sole traders, small business. But essentially, we normally have an initial consultation, completely free of charge, just to go through. Well, what is it that you're facing? What does your world look like? What do we need to consider? And sort of what's been your history to date? And then from there, we send a proposal, and then we basically get on board to then we also, like, once you're actually on board, it's sort of just doing a quick review, making sure that the things that should be lodged are lodged. What was supposedly done in the past has actually been done, because you do find people, they're like, oh yes, I've been paying for this and it's all been done, and then you sort of log into the ATO's portal side of things and it hasn't necessarily been done. So it's doing a quick audit, making sure everything's kind of getting the lay of the land, making sure everything's kind of where it should be, or working out what needs to be tackled first. I've certainly dealt with people that have been 4 or 5 years behind, and need to be brought up quickly. I've had clients where I had some recently where, like their government benefits were kind of, that child care subsidy and stuff like that was going to be like completely just shut off by Centrelink if they didn't get their returns up to date. And the ATO is also really cracking down at the moment. They're kind of a bit sick and tired of being the bank of last resort, really. And they're getting really quite tough on lodgements in general, and that's having flow-on effects for people that do have ATO debts or things like that. If you're actually not keeping up with your lodgements, it will actually default any plans that you might have with them. So there's a lot of it works in conjunction with one another now, so it's important to sort of just be on top of this stuff as consistently as you can. Yeah,
and I think with that ATO debt is so important. I mean, it probably doesn't affect everyone, but there was a huge wave during COVID where that sort of started to stack up, and it's really coming through now. So it literally doubled. So it went from 26 billion pre-COVID to 52 billion post-COVID, and it did then steadily climb even up from that. I think we're still at 54 billion. So it's a big number, and I know ATO debt has a huge implication for finance. If you're trying to borrow any type of money, as soon as there is debt with the ATO, most people literally won't touch you with a 10-foot pole. Yeah, the pool of lenders just plummets, unfortunately. Yeah, so it's something to really get on top of. Okay, this is great. I would love to hear a little bit more, sort of perhaps about the future, what you're planning. Like small business, it's always you're on your feet, you're always thinking about what's next. Have you got anything in mind that you're excited about? Or? Yeah, I think when you put plan and small business in the same sentence, it's like no, those things don't go together. But look, the plan is to, the goal is to really build the business, quite significantly over the remainder of the next 5, 10, 15 years. I would like to retire early, so we'll see if that happens. But it's also to grow without sacrificing the quality that we provide, the service. Making people feel seen, heard and supported is my number one priority. So making sure that is not lost in that growth trajectory is definitely my biggest goal. But property side, look, I think I'm also one of those people where I'm very realistic that I don't want to have all my eggs in one basket. So, I do have 5 properties. I will eventually buy, a family home, or a forever home, but, I'm sort of diversifying now into other things. So whether that's into my superannuation fund or into the share market, it's making sure that I am being responsible and being balanced across all of those. As great as our property market is here in Australia,
you can't foresee the future. You know, you can't foresee pandemics and you can't even foresee how property reacted during that time, which was, I think, sort of blew everyone away. So it's, but yeah, just being consistent, number one, and then two, being balanced really with across everything.
Awesome. Okay. Well, we've covered plenty today. Nice to sort of end on one sort of interesting thing about you. I don't know whether there's any surprises left or not, but
oh gosh, are you about to let one loose, or am I gonna?
No, I think from memory you have. I don't want to say cats if it's dogs, but you
kind of neither. I don't personally anymore. So I grew up, we grew up quite rurally in Tassie. So I was an equestrian from a young age, rode horses till I basically moved to Sydney. And then, so I actually did go home recently to help my mother. She went on a small trip and I looked after her 2 dogs, 4 cats and 2 horses, which is actually almost a full-time job in itself.
Yeah, that's proper country.
Yeah.
You need a big place.
Yeah.
Awesome. Okay. Well, this has been excellent. Really good to hear about you, Sarah. It's always fun just to catch up and shoot the breeze.
Appreciate it.
And really excited to sort of see your business grow. And I hope we can get to work together in the future. So we will put some notes at the end of this so people can reach out to you. Do you want to just spruik your website or anything?
Yeah, sure. Well, so the website is just www.bondfinancial.com.au, and you can find us on Instagram at Bond Financial Sydney. And yeah, happy to reach out if everyone has any questions or would like to discuss kind of, whether they need a new accountant, whether they've never had an accountant. It's actually one of the questions we do get is, how complicated is it? Is it hard? It's actually pretty straightforward. We do most of the heavy lifting if you don't want to tell your old accountant or do anything there. So, if you've been thinking about it, it's actually quite an easy transition.
Brilliant. Okay, well, I'll definitely be helping people recommend that they get in touch. So thank you for that. All right. Well, to everyone listening, thank you for tuning in to the Property Web, and we'll see you next time.